You can really see the money flowing into this group evident in the ETF and the individual stocks as well. And then one thing I did want to mention, right? You look at Twitter, you look at online, and every time you get into September, the talk of the town is September seasonality. It's so bad. It's historically the worst month of the year. But I saw a very, very interesting stat over the weekend that this is only the case when the S&P 500 is below the 200-day moving average. And many market crashes have occurred in September. And obviously that coincides with price being below the 200-day moving average. But when the S&P 500 is above the 200-day moving average, September is historically positive for the general indexes. So that's something really important to know. Obviously, seasonality is always a secondary indicator. Price action of the major indexes and leaders is always number one, but we keep this in the back of our mind. But after reading that, you just see the misuse of that stat, and it's quite, it's very notable to know that September is historically positive when the S&P 500 is above the 200-day moving average, especially when you factor in presidential cycles. And that's what we're looking at right now. And so far, a couple September has been acting pretty good. A lot of the leaders have been acting well, right? The market base sitting above 6,500, trending above all key moving averages. So not the time to be fearful of weak seasonality, especially when what the data shows.